Ramesh, let me start by asking you that. We're speaking on a day when several letters have been sent by the President of the United States to various countries. And we're also hearing that potentially you have the delegation from India that might be once again going to the States. So the conspicuous absentees from those letters and everything that's happened in the recent past are EU and India. Is this the biggest talking point? Are you looking through this to say that this is very near term, it doesn't bother me, I will focus on fundamentals and earnings growth, and for me, TCS earnings onwards is more important?
Now, that's our whole focus. First of all, you have ongoing volatility on this tariff, right? And even if you have some trade deal, don't assume that it's going to cast in stone 6 months later. It'll probably get revisited again with the way US policy is working. So the best way to invest now is not to focus on this noise, whether it's the tariff noise or even the geopolitical noise that constantly has been vibrating through markets. You focus on the underlying fundamentals of companies. And I think the India story, after a slowdown last year, first, growth is picking up. Secondly, monetary policy support has come in, with the central bank very supportive of growth. So I think our fundamentals are in place. There is going to be noise, external global economy, either because of this ongoing situation with tariff or also the uncertainty on geopolitics. That noise will continue. And by the way, in equity investing, there's always a reason why you should not invest.
Yeah.
There's always something to worry about. I've never seen in my career sometimes nothing to worry about. In fact, that's a very dangerous situation when you think you have nothing to worry about. So there's always going to be easy. I think this country, despite, if you look at the history for the last 35 years, we have seen uncertainty on geopolitics, commodity price volatility, economic, strong periods and challenges, market crisis, uncertainty of local politics and global politics. This country has done phenomenally well for 35 periods. Underlying economy has done well, and that's why markets have done well. I have no reason to believe we can't do this for the next 20, 30 years as a country.
Okay, relatively nearer term.
Yes.
And there are now estimates being put out for first quarter earnings for the rest of the financial year as well. The most recent was an international brokerage that's coming out and talking about the potential for an upgrade for earnings because of various things that have happened, not least to which the monetary policy, which you mentioned. And they're talking about, and I know that you're not in the business of predicting where Nifty is going, and that's not what I'm asking, but they're talking about the possibility of, because of this earnings upgrade, even 30,000 on the cards for the Nifty 50. But they're not saying that it'll hit that. They're saying it's potentially possible. Is there a case to be made that earnings upgrades will take place, or do you think that that same nominal GDP growth of about 12%, given what we know so far, 13%, is likely for the top companies in India?
No, so that's our expectation, that over time, corporate earnings and now will follow the trajectory of the nominal GDP growth. Okay. In fact, the nominal GDP growth is slightly lower because we have currently lower inflation.
11%, 10, 11%.
Because the inflation number is low, which is a good thing.
Sure, it's a good thing.
Because finally, we should look at not nominal returns, but real returns.
Yes.
So inflation is good for the country. Lower inflation is good. So I think that's our base expectation. And I'm not clearly, the markets, anyone who forecasts markets, the market makes you humble very quickly.
Yeah, that's true.
Yeah.
So you're saying that nominal GDP growth, or around 12% growth, therefore, is the base case for you at this point. And so from that perspective, the question then arises is, what do you think is going to contribute to that, and how are you positioning yourself, and are valuations supportive? Because we've seen, and I feel like I spoke to you when there was a bit of a lull, and then there was a takeoff in markets between March, April particularly, April, May, June as well. And so you've seen broader markets rally very ferociously in that time frame. The question is, are you seeing comfort in valuations in certain pockets? Are you deploying, and how are you deploying?
So I would say, if you look at market caps, clearly from a valuation perspective, large cap is more valued today than small and mid. Small and mid, I would say if you compare with large caps, about 20-25% overvalued. Other side, I want to make the comment is improving growth and improving monetary situation at the margin is better for small and mid companies. The weaker players tend to benefit more when things improve rather than when things are tougher. In terms of sectors where fundamentals are attractive, where valuations are attractive, and you're finding more opportunities, one, of course, is the large BFSI sector.
Yes.
I think pharma sector, again, the pharma and healthcare space, despite all the tariff noise there, I think it's a great, I call pharma as a consumption sector rather than, it's a fundamentally consumption sector. And I think India is very good on generic manufacturing. And also for the healthcare services we have in India are probably the best in the world for the price we pay. I think we have an extraordinary healthcare sector. So that's the attractive pocket. Then there are smaller opportunities across things. Like, for example, one of the spaces in manufacturing that we like is precision manufacturing, where you bring a lot of technical engineering skill and apply to manufacturing. Think of industrial parts, think of aerospace, think of very complex engineered items. I'm yet to see in India scale up of mass manufacturing, like things like garment or toys. They're yet to happen. EMS has happened. EMS has been a success story, but those are yet to happen. But clearly where we are doing well as a country is where it's complex manufacturing. And then there are a lot of things. And I think because of the sheer large scale, there's always going to be new opportunities on consumer. Consumer spends are evolving. So you are going to see the staples companies have slow growth, and because a lot of categories have hit significant penetration. But there are a lot of new consumer categories that are emerging that have very low penetration.
Give me an example.
It can be as basic as chocolates. I'm not talking very basic category because see, we are a country of mithai consumers. Right? And chocolate is in a way a new form of mithai. And of course a lot of variety of flavors. So it could be processed food, variety, for example, there's now you want to have ready to eat upma, poha, as basic as that item because you don't have time and just the scarcity, the paucity of time. So there are a lot of opportunities and of course, travel is one mega thing.
Travel and tourism.
Yeah, because as people get more richer, one of the areas that sees a lot of benefit is just entertainment and travel. Those are real where discretionary money flows. So
you've elucidated all of this very beautifully. The question is, a lot of people talk about these things and the information asymmetry has actually shrunk very dramatically. So there are so many pockets where it is over-owned very clearly. So are you fearing that the opportunities to deploy are diminishing, or do you think that that's not something to worry about at all? Yeah, so it's a function of how much you invest in research, fundamentally. Another thing, the good part about India is the market universe is expanding. There is a couple of IPOs every week. So India is not a static pool of market. And new opportunities, new companies are going public. So we are a dynamic market. We are not a static market like US, where the number of listed companies are falling. But they have a much larger pool. Yes, but we're growing. But the number of listed companies over the years are falling because more companies are choosing to go private. In India, there is still a huge need to go public. Markets provide risk capital. So I think that opportunity continues to expand with new companies going public. So it's not a static universe, it's a dynamic universe. And new opportunities are emerging. You have to spend time understanding those spaces. There are things, I'll just give you an example of precision manufacturing or EMS was not a big deal 5-7 years ago. It's suddenly now an emerging story. A CDMO in pharma, again, not a big deal 5 years ago, but suddenly a new opportunity. Co-working spaces, again, something I would say post-COVID phenomena. Asset management companies. Yes. They have been around, but they have actually hit scale. Significant scale in the last 5-7 years. Wealth management. So a lot of opportunities which were smaller or on the fringes of market are going mainstream. So those opportunities are there. On that note, thank you so much for taking the time. Thank you. Pleasure having you.